Factoring company for truckers, HMD Financial.
To those who are new to the world of trucking, factoring may seem like a complicated issue. However, many people find it a real lifesaver once they get to know what it's really about. Some use transportation factoring to boost their business. Others set up new companies providing freight factoring services and help other businesses to thrive. Such big industry names include Henry Malukas and Diva Malukas, the owners of HMD, who have recently established a new entity to add to the already existing 7 other companies in the group. Meet HMD Financial, which will provide high-quality factoring services to respond to the skyrocketing demand in the market and ensure a steady cash flow to trucking ventures. But before we get into the details of this new venture, let's start from the top and see what factoring in trucking is.
What is factoring in trucking?
Freight factoring is a service that allows drivers to sell their invoices and get paid for completed deliveries within a very short time. You no longer have to deal with net 30, 60, or 90 payment terms or wait days to cash your invoice. You just deliver the loads and the factoring company does all the waiting and collects the money. Naturally, this service is not provided free of charge, but fees are usually a relatively small commission that rarely exceed 5% of the invoice amount. For such a small fee, you ensure a steady cash flow to your company and no longer need to survive from payment to payment. By using the service, you get secure funding of fuel, salaries, fleet maintenance, hiring new drivers, and new trucks. Secured in this way, you can take on new contracts and catch every profitable opportunity that comes your way. Thanks to the solid financial backing, companies that use factoring services can attract high-profile clients, perform more deliveries by expanding their fleets, and eventually sell even more invoices to a factoring company, rolling them like a snowball. Statistics from various factoring clients across the USA show that this is an opportunity to double revenue within a single year. Sounds great, doesn't it?
2 types of factoring.
There are 2 types of factoring that deal with invoices differently: recourse factoring and non-recourse factoring. In the case of recourse factoring, if the company fails to cash the invoice, you have to buy it back. However, there are sizable bonuses that outweigh these risks: much lower factoring rates, higher advance rates, and faster access to cash. With non-recourse factoring, you will not have to buy the invoice back. However, that alternative comes at a price. The fee is usually higher, the credit check takes longer as it requires a very careful examination of the carrier's clients, and the choice of clients is also limited as the payment history requirements are more stringent. To summarize, when you use factoring, you get your well-deserved dough and pay a commission that is by far smaller than the amounts typically charged by banks. This option offers a higher level of protection to your business than a bank loan, as you can sell any number of invoices without being restricted by high interest payments and secure your capital. In either case, the cost is lower than that associated with borrowing from the bank, as in the latter case, you have to both return the principal and pay the interest. Taking out several loans in a row might lead to a situation where the accumulated interest rates have become a heavy burden, especially if the cash flow is interrupted due to market fluctuations.
About HMD Financial.
Choosing a reliable partner is key to a successful factoring journey. You will find a great number of factoring providers offering different rates, bonuses, application processing times, recourse or non-recourse factoring options, etc. Established way back in 1998, HMD has grown from a small family-owned freight hauling business to a large group of companies that provide service to both shippers and countless owner-operators alike. The group currently consists of several well-known names: HMD Trucking, HMD Transport, HMD LLC, HMD Motorsports, HMD Bar and Grill, and Benefit Trucking. HMD Financial is a newcomer to the group, but it is backed by the other HMD businesses combined 24 years of experience. We operate out of the Midwest with headquarters in Chicago and a few other offices, including one in Indiana. Our geographical reach covers all of the US, offering a range of online services via our website and app, which ensures a very simple procedure with zero red tape. Always appreciated by the practical people in the truck driving business.
How much does HMD Financial charge?
HMD Financial is a factoring company for drivers, so we charge only 1 to 3% for our services, as compared to other vendors in the market who charge up to 5% and pay up to 97% of the invoice value in advance. Apart from a potential whopping 99% upfront payment, we offer an ultra-fast turnaround. You get the money in your bank regardless of location within 24 hours.
Conclusion.
To sum it up, freight factoring is a service that has evolved to help small and mid-sized companies boost their potential and successfully compete in the market. It can be a solid method of protection and financial backup for the vulnerable trucking business. If you are still undecided about using freight factoring, feel free to contact HMD Financial for professional advice. We'll be happy to provide every detail you need, introducing you to a whole new world of secure financing. We hope that our services will take you one step closer to success. There's only one chance to check if this is true, and this is to become our customer and enjoy the convenience and efficiency of the service we provide.